long been an advocate of gold, both as money and as a speculation and as a vehicle for savings. I started buying gold when it was $42 an ounce back in way back when, 50 years ago. And it's treated me pretty well. And sometimes gold has been an excellent speculation in addition. So my suggestion to listeners is that if they want to save money, set aside capital, they do it by buying gold coins and buy silver coins too. That's what they should do. If they want to speculate on things, well, you can do that in the stock market and the bond market and other places. The price of gold had been $35 an ounce since Roosevelt artificially fixed its price at that point. You'll recall that before 1933, you could take your $20 bill, go down to the U.S. Treasury, or any bank for that matter, and trade the $20 bill and get a double legal gold coin, which is to say an ounce of gold. Well, since then, that's been impossible because the U.S. government has been printing up paper money much faster than it's been adding to its gold reserves. So I guess they're not going to stop doing that. I mean, they painted themselves into a corner. They can only print money at this point. Having paid attention to economics and the way the world works, is that the U.S. government was getting out of control. I mean, that these people think that government not only should, but can control the economy, that they were going to continue printing money. And now it's gone into hyperdrive. So actually, gold at 2,300, where it is more or less today, is probably as good a value as it was way back when it was $42 an ounce. It's said that the U.S. government owns 265 million ounces of gold, okay? So what you have to do is take the number of dollars in existence and divide the number of ounces of gold that the U.S. government owns and come up with a number. And, these numbers are all floating around and inaccurate, but just U.S. dollars that are outside the U.S., forget about the dollars inside the U.S., but just the dollars outside the U.S., and nobody knows how many of those there are, but it's probably something on the order of 30 trillion, wild guess. And you come up, if you use even that number, you come up with, doing the math in my head, $10,000 an ounce. So no, it's going higher. I'm not talking about tomorrow or next week, although we're in a bull market, but yes, it's going higher. If we talk at this time next year again, I think it's going to be way above $2,300 an ounce. Let me preface what I'm going to say by saying that mining is a crappy industry. It's really a 19th century choo-choo train industry. Look, mining is a terrible industry because you've got to spend millions, maybe many millions of dollars to go out on an Easter egg hunt looking for a potential deposit. The odds are way against you finding even something that looks like a resource. And then you have to develop it, which is going to cost you many more millions, tens of millions, hundreds of millions. And then your trouble really starts when you've done enough drilling at great expense to find, yes, there's an ore body of some type down there, gold, nickel, copper, whatever, what have you. Then it's going to cost probably billions to build the mine. All this money's upfront on the if come see. So as a business plan, that's a horrible business plan to make guesstimates for huge amounts of money that you'll probably fail at. And then, after you're in production, you have a fixed asset where governments will tax you and NGOs will try to shake you down and make your life miserable, and native groups will look for their piece of the pie. It's a horrible business. So why am I interested in mining stocks? Because they're a very small area of the market, and sometimes they go from being very, 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 very cheap, too cheap, to very, very, very expensive, too expensive. They're really the most volatile class of stocks in the world. They're even more volatile than high-tech stocks. So your timing has to be good. Right now, is an excellent time to get into them. It has been for the last couple of years. They've gone nowhere for the last couple of years, but I'm a buyer. I think that price-wise, they have a great future ahead of them. And gold has gone up a lot, but the companies that mine it have not. What does it cost to mine an ounce of gold? Well, a lot of definitions of what constitutes cost, but All-in sustaining cost is the most popular, maybe the most accurate parameter of what it costs to mine an ounce of gold. And industry-wide for producers, that number is roughly $1,300 an ounce right now. Gold's selling at $2,300. So the big mining companies are making a lot of money right now, but they're not recognized. Now, why is that? Because, people hate the idea of mining. They say all these terrible things about mining companies, and with the DEI and ESG parameters that big fund managers like BlackRock and Goldman have, they don't want to own mining companies. That's like the kiss of politically correct death. So they're under-owned right now. So I'm a buyer. I think that that's going to change. At least if you want, steel to build buildings and aluminum to build aircraft and so forth. In a bull market, the big companies that currently have earnings are always the ones to move first. I mean, they're the names people know. They're what people will buy first. But I'm not crazy about big mining companies because they're run not by entrepreneurs. They're run by suits. They're run by bureaucrats. So the companies that I prefer to speculate with are, let's say, smaller producers or, God forbid, even explorers. If I like the people that are running the companies and like the results they seem to be getting, because these small companies, they're nano caps. Some of them are pico caps. They're so small that they tend to be very, very volatile. And it's possible, because I've done it, to get 1,000 to 1 over the course of a few years. That's possible. Unlikely, but possible. But when the market gets the bit in its teeth, the average mining stock will go up 10 to 1. Many will go 100 to 1. Many people confuse speculating with gambling, but they're very, very different. Gambling is taking an even odds bet, or even less than even odds if you go to a casino, obviously. I'm not interested in that. When you're a speculator, what you're doing is you're capitalizing on distortions in the marketplace caused by government, which is the major factor in the marketplace today. So if you know something about the mining business and know something about geology and know a little about mining engineering and know about the politics that are involved and the people that are involved, you can make an intelligent assessment of what's likely to happen as opposed to what the hoi polloi, who don't know anything about mining, think. So yes, it looks like it's gambling, but it's not, or at least it shouldn't be. Over the years, I've developed a mnemonic. I call them the 9 Ps, so you can remember them and don't forget them. And they're all things that begin with the letter P to help you remember them. And the first is people. It's more important than all the other Ps put together. Good people make for good business. So living in Vancouver, you've got all kinds of people involved in the mining business, and you want to sort them out. You want people that are technically competent and have Boy Scout virtues. Then after that, you look at the properties that they're playing with, and you have to know something about how to assess them. Look at the properties. Small deposit, big deposit, single metal, multi-metal, many, many, many things. The next thing that you might want to look at is financing, spelled with the PH. It's great if you have good people and a good property, but how are they going to finance it? Are they capable of doing that? How much money is in the bank, or do they have debt? So forth. Politics, it's another P. What's the jurisdiction? Is it in Quebec or is it in, God forbid, Massachusetts? So you have to analyze where it is. Is it in the Congo or is it in Finland? Because the political situation in all these places is different. The paper. How much paper is out there? These companies, the main thing that most of them produce isn't metals, it's paper, selling stock. So who owns the stock? What's backing each share in terms of dollars? So there's a lot of things to look at before you decide to speculate. And incidentally, I do say speculate because you can't invest in mining companies, really. I mean, they're too unpredictable to invest in. That's why Warren Buffett famously never invests in mining companies.